Are you a forex trader and over the time you have been confused about what liquidity really means, how to identify the zones, and how to work around it for your entry? Or maybe you have experienced different situation of when you enter a trade and the trade will now stop you out before the trade eventually goes to your direction. I want you to listen to me in this video. I'm going to share with you a powerful concept around liquidity, the two types of liquidity that every trader must know and understand how to work and use them in trading. This discussion is going to really shift your perspective about entering positions and how to navigate the concept of liquidity and liquidity zone. So I said two types of two types of liquidity zones every trader must know. It's very important that you pay close attention to this discussion because this 2026, it will really do you well to be able to harness every possible information that can shift the narrative of your trading experience and result. So, and one of the things that is very central when it comes to the financial market generally is liquidity. It's very important. Liquidity is like a pool of order or a pool of money, and wherever you see liquidity, there is high tendency that there's going to be a massive movement right from that particular position. So I'm going to share with you the two types of liquidity zone that you need to know. The first one is what we call blocked liquidity. Blocked liquidity zone. And the second one is what we call unblocked liquidity zones. This is very important. And of course, let me just show you a schematic of what I'm talking about. The first one is blocked. Let's say we have, okay, let me just label block here, blocked. Okay, liquidity zone. Let's say you have a scenario where your trade is moving in a downward trend like this, something like this, and you notice a break of structure around this place to the point that this break of structure created something that looks like an order block around this place, another block around this place. This particular order block is what will now form your um, suppose you have a green candle around this place. Yeah, something like that. Green candle. See, this green candle is the last area where the buyers, struggled with the market, trying to push it up, but the sellers now come into the market and they were able to infuse a lot of money into the market that drove the market to the downside. You see, that particular position, that particular order block, that particular area is an area of blocked liquidity. You will notice that whatever decision or whatever other position that drove the market down must have been massive. You have buyers in the market, you have sellers, and of course, the market movement is a result of orders from the buyers and orders from the sellers. Are you getting me now? So if you have a lot of orders from the sellers, the market, the price of that particular asset is going to drive down. Why? Because a lot of orders, a lot of capital flow into the market to sell it. Are you getting it now? By the time they now compare it with the orders to buy, you will realize that the margin is very wide in favor of the sell. So that particular area from where the recent movement happened that created a break of structure is where we call blocked liquidity. Now, the essence of knowing this is when price now comes back there, the same set of people that created that move that can do it again, in addition to others that missed out on that particular move. I want you to really get this because it's very important. And of course, I'm going to go into the chart and I will show you, in fact, I will show you a trade I picked yesterday. You will see how the trade played out, although the trade is still running, but you will see how it played out, so that you will understand that it's very crucial that you understand and know some of these things, so that you can really know how to apply it to your trading. It's very important. So the first type is blocked liquidity. Anytime you can notice a zone where a massive move happened, the previous engagement of the alternative movement, is going to give you idea of that particular area where you can say this area has a lot of liquidity pool. Liquidity pool means pool of orders, pool of money or capital or fund. Are you getting it now? You see that particular area, when the price comes back there, I want you to take note. When I get to the chart, I'm going to show you how to really, work around this liquidity zone, because a lot of people, you hear something like order block. When it comes to my order block, I will set my pending order, and when it comes there, it will take me. You are not sure whether the same set of people that created that particular move will still put their order there. So you need to know how to really address or work around a block liquidity zone, so that you will not burn your fingers. You get it now? I'll show you when we get to the chart. The second type is the one we call unblocked liquidity zone. Unblocked liquidity zone. In fact, this one is very, very dicey. And this is why a lot of people, if you are not really careful, you will just be confused in the market, that what is happening, what pushed this market and all of that. Suppose you have something like this, you have a movement like this, the market is moving down. It's clear that the market is moving down. You now see something like this, very small movement. You now see something like this. All of a sudden, you now see the market comes here and the market now move from there. You see, this particular area is, let me just draw this so that you understand. And don't let me use this line. Let me use this particular one so that you really get it. Yeah. You see, the market was selling, and a massive, a level of massive order to the downside was pushing the market down. So you have this massive move to the downside, a corrective move, then you have another massive move that created a break of structure to the downside. I mentioned blocked order liquidity zone. This would have been the blocked liquidity zone, where if the price can come back there, you can probably position for another entry to the downside. However, the market can create something that looks like liquidity area that you cannot see if you are not careful. So the market will, after this break of structure, you will see the market create a movement like correction. Then it will now create another movement as if it's going. Because a lot of people in the market, they are looking at what the market is doing, and immediately there is a break of structure and they have a correction, they now see the market moving again, they want to jump there. Now, because they want to jump there, a lot of people, focus their attention on the initial movement. Meanwhile, the big players, they really need alternative orders to take their move to where it's going. So they will fake them out a bit, then the market will now come back and pick a lot of liquidity that is resident here. Because at this position, a lot of people that will enter from this place, they will set their stop loss here. This is what we call, or the case of liquidity sweep or liquidity grab. Are you getting it now? So, or let's say liquidity sweep. It will sweep out all the maybe the stop loss, of those people that took the sell, and that stop loss will now create a move that will now give you the alternative or the massive impulse move that you are looking for. Are you getting it now? I'm going to show you in the chart so that you will understand what I'm talking about. Let me just first show you the trade I took yesterday, around this time yesterday, or maybe in the afternoon. The trade is still running, and we are hoping that the trade will deliver. You can see the trade is on USD JPY. So I took this trade. You can see the trade is already almost ratio 1 to 4, almost at take profit, and definitely all other things at constant, this trade should deliver. Are you getting it now? So let me just hide this so that I will show you how I took the trade and how I am engaged the concept of blocked liquidity zone. I want you to follow me very closely. So the starting point of our analysis, of course, if you have been following me, is to check the directional bias, which I did that. When I say the starting point of our analysis, I mean when you get to the technical storyline. Before we come to this area of technical analysis, we have done fundamental storyline, we have done sentiment storyline. This is very important. And these are the two analyses that now give us a strong rationale to pick this currency pair, USD JPY. So you don't just go to any pair and say that you go and check your directional bias. No, you must have done your identification protocol, which is the fundamental analysis, your optimization protocol, which is the sentiment analysis, to pick an asset that has the likelihood to give you a massive move to the upside or to the downside. You need to really get this. So when you now come to the technical analysis, that is the third dimension or wing of our analysis at Potential Miners International. So when you now get to the technical storyline, you now begin your technical storyline by checking the directional bias. That is what you will now use the Dostal evaluation I talked about in some of my videos. On you check the directional bias on the weekly. Okay, the price is above the cloud. It's clear that we have a bi-directional bias. Let's go and check the orientation of the market. You see now, if you zoom this particular trade out, something like this, you will realize that we have a mark-up orientation. You might need to listen to some of my videos on market orientation. So we are expecting this particular USD JPY to push up, predominantly on the long run. All other things held constant. However, you are not to worry yourself when it comes to orientation of the market. You just want to see what is happening on a global, big or long-term perspective on this particular asset. And that's the second thing you do. Then the third thing is to go to your daily. You want to see what is the structure and tide. What is it talking about? What is our tide? The tide is a buy. You can see that the price is above the cloud. Then what is the structure? You can see, I want you to follow me very closely. Let me zoom in so that you can see what I'm talking about here. You can see this, the cloud is showing us that we have a buy tide. Okay, now, buy tide is like the current predominant trend and is always on the daily. So once your current predominant trend is in alignment with the directional bias on the weekly, and the directional bias is in alignment with the orientation of the market on the monthly, then you have reason, strong reason to position for the direction of a buy or a sell. In this case, we have a directional bias pointing to the upside. So when we go to the daily, we see the tide, the current trend is a buy also. We now want to see what is our structure talking about. You can see this, we have a break of structure, to the downside, a change of character, a change of character here, a change of character to the downside, a change of character to the upside, a break of structure. Because I took this trade yesterday, and I want you to follow me very quickly, or very closely, I mean to say. So we have a break of structure here. So I came here. This was yesterday, so that it will not confuse you. I saw this trade yesterday and I positioned for it. So yesterday on the 4 hours, we also noticed that we have a change of character to the upside. And notice that on the 4 hours, the tide is still a buy. So I positioned and I waited for one full 4 hours correction after the break of structure. Remember the theoretical picture I painted the other time. There was a massive break of structure, movement to the upside or to the downside, in this case to the upside, that created a break of structure or change of character. Now, that particular area of the alternative, action, this particular area is the area where the buyers was able to win the battle. Are you getting it now? So you say you want to say this is the structure tight box in the context of our trading system, and this is where we call the blocked liquidity. Are you seeing it now? This is the blocked liquidity. You expect that the price, once it comes back there, you are not to take trade immediately. Then you will now go to the entry time frame, which is the 1 hour. You will notice how I'm doing this step by step. Entry time frame. Once the price gets into the order block, or what we call the block liquidity zone, now you will now wait for the market to tell you whether those people that push the market up in the first instance, these same people that push this market up, maybe they are still in the market to do the same thing. So we waited for the price to come into the block liquidity zone, which is the other block area. Then we will wait for an engulfing move. And I got the engulfing move around this place, which was very beautiful. Yes, this was the engulfing move. So I positioned the trade to the tip of that entry, because I use cash flow model, which we have to pick ratio 1 to 4. If it were to be investment model, it will be ratio 1 to 5 or ratio 1 to 6 if you can really wait for a refined entry. Are you getting? But on the minimum, if it's investment model, it will be ratio 1 to 5. So this was where we picked the trade from, and you can see ratio 1 to 4. Expectedly, this particular trade should move up and take us out at our take profit. In this trade is almost like 80 or 90% in profit, but we'll leave it to run because we expect it to get to ratio 1 to 4. There's no panic. In fact, on this trade, I'm yet to break even. You get it now? Is when you notice that there's going to be an alternative movement that you now be talking of breaking even. For instance, maybe there's going to be one powerful news of interest rate or of inflation rate or something like that. And you can now consider breaking even. Are you getting it now? If you have a massive move like ratio 1 to 3.5, you can now break even to just be on the safer side. However, there is no panic. You set your parameters and you allow it to run. On the alternative, when you talk of a trade that has unblocked liquidity, let me see if we have a particular trade. Let me see, let me check this so that uh, but let me just explain this. I might not need to do example of a trade for you. Unblocked liquidity is when you have an area of swing low or swing high. that will now form something like the liquidity, uh, something like this. I want you to pay close attention now. Something like this particular area. You get it now. This was a swing low. Are you getting it now? The price came down, sweep all the others here. All those people that enter a buy here, they would have set their stop loss at this edge of the market. So the market comes here. Once the market comes into this place, the market was able to get enough of liquidity or money pooling around this place, which is unblocked. You will see that we don't necessarily have any block here. In fact, if you check this place, if you position this to this place, you will notice that the market break below any of this particular swing high, I mean swing low, and the market came below it to grab a liquidity, and that liquidity is what we call unblocked liquidity, and it will push your market up, and that will generate the impulse move that you are looking for if you are using that particular unblocked liquidity at the point in time. So if you have been listening or watching videos, you will hear maybe traders talk about sweep liquidity. This is the liquidity area where it will sweep. Is either an area of a swing low for a buy market, or an area of swing high if you want to sell. So that area of swing high, let me look for an area of swing high. Let me look for an area of swing high so that I will just use that as an example. An area of swing high that the market will take out before it now continues to buy. This has been a buy market. Let me look for, let me see if I will see a sell market on Bitcoin. Some of these markets, they have something like this. You see, I want you to pay close attention now. Pay close attention. This was an area of unblocked liquidity. You will see that this is the block liquidity. Block liquidity. The market did not get there, but the market came and sweep everybody, out from here. You see it now. This particular break of structure, there was a correction and the market started selling again. A lot of people jump into this sell, but what the big players will do, they will now come back, because if you sell from here, you will likely put your stop loss around this place. You see, this area of stop loss is still money, liquidity pool. The big players can come down and they will grab all the liquidity here, and this liquidity grab is what will create the next move to the downside. This is what we call unblocked liquidity. You need to understand these two liquidity zones, and it's very important. Now let me say this. It's very important for you, before you can take a trade at any point in time, is either you are using an unblocked liquidity or a blocked liquidity. Don't take a trade if you have not been able to identify either unblocked liquidity or blocked liquidity. I really want you to listen to this video and pay close attention to every of the facts and details I shared here. Some of this information are premium, but we just feel we need to help a lot of traders. A lot of people are just struggling. If they ask them how is Forex going, they will just give you random answer. But they are not really making any profit. It's not because they don't even have capital. A lot of people have capital, but they are still not making profit. Are you getting it now? So is either you have an area of unblocked liquidity where the big players will come and sweep liquidity before they go in the direction they really want to go, or an area of blocked liquidity, the one is popularly known as blocked, order block. Before you take a trade, you must identify either of these two. If none of this is present, don't take any trade. Meanwhile, when your price comes there, you don't set your trade order there immediately. When the price comes there, allow the market to tell you whether it's now going or not. This is the mistake that a conventional or an average trader does. This is what they do. They will wait for another block. They say once the market comes there, let the market comes there, then you will observe the market. If you can get an engulfing move in the direction of the move you want to trade in, then you now have validation to take your trade. This is how to use, these two types of liquidity zone to your advantage. And I really want you to begin to tweak your strategy if you have not been, doing things rightly the way I've explained it, so that you can get the best return and best, profit for yourself in 2026. Until I see you in the next video, I remain Mr. Akimbode, the king of waves. Thanks for listening. God bless you.